Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 20th of May, 2016. Hope you had a good week here. The markets did. The equities were basically higher. Dow lost a little bit of ground, as did commercial real estate and the bonds. But equities were up for the week for the most part. And although it was close to going negative year to date, the S&P 500 on Thursday, that is still positive for the year. Oil has had another good week here, up 3%. We'll start off by taking a look at a weekly chart of that. Now, it looks like oil's possibly coming into an area near 50. It's a round number, so there's psychological importance assigned to that. But it's had this spectacular run of close to, doubling here really since the lows this year. And I think that it's probably due for a pullback. We have zero evidence so far that it is ready to pull back, but this is a potential area where resistance might be found. And if that's the case, I think it would likely be a pullback, maybe down towards 42, 43, and that could potentially set us up with an inverted head and shoulders pattern and provide longer term support for the case of bullish oil. Now to the equities. S&P 500 did break down on Thursday briefly below some important support that a lot of people have been referencing. And as I pointed out Thursday evening on a Twitter post, that these head and shoulders patterns that are so widely watched and recognized rarely work. This being the left shoulder, this of course being the head, and here the right shoulder. Now, it doesn't mean it still may not be trapped. We're still below the 10, 20, and 50-day moving average. And let's just clear that up. You can see that if we get stuck and find resistance in here, then perhaps this downtrend that we've been seeing over the last month or so may continue. We still have mixed messages in this market. So when we look at the intraday time frame here, looking at 30-minute candles on the S&P 500, so going back basically towards the beginning of the month, we see we've had a very choppy month in here. And what I want to do now is just kind of zoom in on that using 15-minute candles, just so we have a little bit of clarity. Today, what we saw was we rallied up pretty close to this little trend line that's been intact since the middle of the month, but we did get back above. So we gapped up today and we held above on a closing basis this 5-day moving average. So if we go back to what we had for this week, this is the price action we saw this week. And looking at it from a volume weighted average price perspective, you can see that the pullback this afternoon came right down to that level. So not only did we gap above and hold above that week to date volume weighted average price, but we held above it here on the pullback in the afternoon. So that, I think, looks pretty positive going into next week. My bias is starting to become more neutral towards bullish, and I think that the key level we want to see hold really 205 down to 204.75. If we hold above that and then take out these highs next week, it looks to me like this market wants to continue to go higher. And you could even, if you look here, you could call this a left shoulder, this being a head and this being a right shoulder. Let's not get too caught up in those patterns, though, because the people who get caught up in the patterns and just recognize the head and shoulders top, get shaken out, rather than be aware of all the potential scenarios for the market, but listen objectively to price action. The bearish scenario for today would have been that this prior level of support would have held as resistance, and then had we not gapped higher and instead done something like this, let me just draw it in with these little bubbles, done something like this, it could have led to a bigger breakdown. But for now, obviously, that has been avoided in the S&P 500, and this market now could be just correcting through time, or is it building energy to break to the downside? We simply don't know yet. We don't have enough evidence, but for now, if we can maintain above 204.50 to 204.75, I think the buyers in the intermediate term get the benefit of the doubt for the S&P 500. Now, for the Nasdaq, we've got a pretty choppy chart in here as well. We broke some important support, and then same thing, we gapped above that in this market as well. So let's drill that down to 15-minute time frame, and again, looking at just the action of this week, boxing it in like this. this, we can see that today the week to date volume weighted average price we got above and held above, and we're also above a rising 5-day moving average. Now, I should have started out with the bigger picture, that is the daily chart, but here we can see we're stuck below that 50-day moving average, and realistically, the Nasdaq is kind of stuck in a range here. That this range, is it going to break higher? Well, one clue to that might be the semiconductors, which had a similar type of box there that it's been trading in for the last week and a half, also below a 50-day moving average. But what we had seen was that the volume weighted average price for the year to date, if you follow my cursor right now, you'll see that we came down to that right here last week. And then from this low right here, the volume weighted average price was acting as resistance. Now we're back above both of those, and we're right at that 50-day moving average, right above that 50-day moving average once again. And this prior level of support right now is not showing any resistance. It was a potential level of resistance that this market might have slowed down at, but what we saw was earnings from AMAT today really drove this semiconductor group higher, and Applied Materials up at yearly highs, 52-week highs, overtaking the gap down from about a year ago at this time. So semiconductors might be telling us that the worst is over for the semiconductors, and perhaps the Nasdaq as well. It'll be interesting to see if this market can get back above really this peak and then hold above it. If so, I wouldn't be surprised. You could start to take a look at it and say, well, that if you like patterns, would this be a cup here and this being a bullish handle? If we're running up to the top past this 50-day moving average and hold above it for a day or two, then I think we've got the chance that we can in fact continue to move higher for the Nasdaq. So let's break all this down and get rid of all the garbage on the short-term chart. We're still in a choppy range while we are in this area here. We can see that we have this high over here, we have a lower high, and we still have a lower high. So this is the band of resistance that we want to see taken out, and that 50-day moving average, before we can think it has the possibility to move similar to what the semiconductors. Let's now take a look at the Russell 2000. I had suggested that maybe this was the going to be a bear trap here the other day, but it did end up taking out the low where I had suggested it. I was thinking that perhaps this would be the bear trap, and I said we want to be aware of all situations. We didn't want to call it bullish over here. What we wanted to see was for it to rally up, maybe do something like this, and then for it to kind of build energy and then break resistance. That's how we would have known at this point that in fact the trap had been set. Now we still have that potential, and I think a similar type of situation is needed, where it's going to need a little bit of time in here for it to heal before it can get beyond the key levels, which I think are closing above these highs right here that we had seen earlier this week. If we can close back above those highs and hold it for a day or two, I wouldn't be surprised to see us testing the highs for the year once again. Looking at Apple, Apple did the same thing. Apple did in fact give us excuse me, a breakdown through an important level of support. And a lot of people look at that and say, hey, it's time to get short. I had mentioned that the possibility was there that we would break that level and it wouldn't unravel the way so many people had expected, because one, we've dropped so far. Once you drop, you always have to ask, where have you come from? Well, once you've dropped from basically $112 a share here down through that 92. So it had dropped 20 points in the month prior, and then it breaks down. Where has it come from? How much energy is expended getting there? And when it comes back up through there, well, what happens? Well, what we start to see is that stops get taken out from because it hit these lows. So the people who've been holding, this entire time, they say, well, if it gets back below there, I want to get stopped out because that means it's broken down. And then short sellers, new shorts come in, but the bigger shorts who are already positioned for it, they start to cover. As they start to cover, new buyers come in. In this case, it was obviously a headline-driven event that Warren Buffett was coming into the stock, and it got back above that 5-day moving average and held. And now we have these higher lows in the intermediate term, along with higher highs for Apple. So if you're an intermediate term investor, I think your worst case stop would go, down near about 93 and a half. But the daily chart still isn't, that exciting to me. What I'd mentioned on this day when it closed at about $93.80 a share was that it looked like it was possible to hit the 20-day moving average, which at that time was at $97.20. Well, today we finally went through that, but we're $2 lower in that 20-day moving average. So be aware that moving averages can move even if the stock just turns sideways, because you're getting rid of data that was 20 days ago and replacing it with data down here. That's why it's called a moving average. It moves based on what it's done and where it has the potential to go. Bonds lost a little bit of ground, but they're still, in my mind, as long as we hold above this bigger band of support down here, the longer term trend, you continue to give the benefit of the doubt to the buyers. We're above a 50, 100, 150, and 200-day moving average. And I think that another encouraging stock was Tesla. Tesla this week, the big headline, of course, was that they had announced a secondary offering. It's been struggling with this volume-weighted average price year to date, and it had been trading this little range. Goldman Sachs, of course, upgraded it on, I guess it was this day, on Wednesday, and then they announced the secondary after the close. That had people all up in arms. But if you just look at price action, it's starting to become more bullish once again in Tesla, as long as I think that you hold probably about 213 to 214. I think that Tesla is most likely going to continue up towards that 50-day moving average up near 230, and then you kind of see, put your stops, trail your stops up you trail your stops up just below the most recent relevant higher lows for your time frame. So for now, I think that this is the most recent relevant higher low, perhaps this level right here, and this is where we have potential for support. Whatever you do, you've got to make each trade your own idea and accept the personal responsibility and know exactly what your personal time frame is, not to listen to people who say I'm bearish. And what does that mean? Bearish for what time frame? For the next year, which is foolish because markets, it will give us so many opportunities to trade bullishly, even if we are in a bearish environment. For me, it's the intermediate term trend. That's the time frame that I speak from and that I trade from. Again, hope you had a good week, and I will talk to you next week. Thank you.